What's up everybody, welcome to the members video. I'm in the Christmas spirit and the giving mood, so I'm going to make today's members video free to the public so that everybody can see it. And if you're wondering what we're doing over in the Stocks Channel Discord, this is the type of members only video that you can get used to when we get into market conditions like we're currently in. Alright, so first we're going to take a look at SPY and we're going to try to get the exact price action we're looking for to know exactly where the stock market's going to go. So right now I have this Elliott Wave count that we're going up in 5 waves, and I think that we just completed wave 3 and we're still pulling back in wave 4 before we go for one more leg higher to finish out wave 5. So in order to do this correctly, we need to know exactly which price action to pay attention to, because it's still the possibility that this was wave 3, this was wave 4, and we already completed wave 5, and now we're already going through the correction. However, we're still in a bull market, so we never want to assume that's the case. So right now it still looks likely that this was wave 3 and we're going down in wave 4. We're going to know that this is wrong if we start to see wave 4 breaking down below about 444. Right now we have very strong support at 450, and we still have our support trend line right around 446, and we have our strong support level at 444. If we start losing all 3 of these strong support levels and closing below SPY 444, it's very likely this was indeed wave 5 and we're going through the full-blown stock market correction now. However, if these support levels hold up and we start to bounce, we are more than likely going to see the Santa Claus rally, and we're going to see SPY making another all-time high before the end of the year. That's the count that this currently favors, because as I said, this is wave 4, which means we're going higher in wave 5. So your line in the sand on SPY is right around 450 to 444. If we start breaking below these support levels, we need to zoom back out to the daily chart, which we'll do right now. And looking at the daily chart, you can see that means we're going to correct this entire 5-wave move, coming back from the original low back in September of 2020. So in September of 2020, we started into a bull rally, and it is possible we are ending this bull rally and we need to correct this entire move. If that's the scenario, we're more than likely going to see SPY coming all the way down to about 414 to 397 and possibly even 378. That is the full-blown stock market correction scenario, but in order to assume that is the scenario, we need to break down below that support level right around 444. So we're very close to knowing if we're going to get the full-blown stock market correction, or if this is just a pullback wave 4 before we go higher in wave 5. So just to recap on SPY, you're looking for a breakdown below about 450 to 444 to tell us that we're going much lower to about 414, 396, or 378. That is the bull scenario pullback, and I think that's more than likely going to be a major wave 4, and I think we would still go higher in a wave 5 to complete the secular bull market. We can talk about bear market scenarios later if we start breaking below those levels, but that's way out there in the future, so we're not going to waste time talking about bear market scenarios today. What we know right now is we're still above critical support, with the highest probability chance that we're still in a secular bull market going higher for another leg. Okay, the next market we'll cover is the triple Qs, and again we have the same wave count where it looks like we completed a wave 3 and we're going down in a wave 4 before we go for that next leg higher, which could take the triple Qs up into the 420s and higher. So right now on the triple Qs, the levels we want to pay attention to are right around 379, which you can tell we did start to bounce off of on Friday, and if we break below that, the next critical level is right around 372. And our support trend line is a little bit lower, right around 368. So 3 critical support levels on the triple Qs for the bull market scenario is that we have to hold above one of these levels at 379, 372, or about 368. If we start losing the support level at 368, it was more than likely that this was wave 3, this was wave 4, and this was wave 5, and now we're going through the full-blown correction. However, as long as we're above support and we're in a bull market, we want to assume we're going higher, so it still looks possible like this is the count, and we're completing wave 4 before that next leg higher, which does go hand in hand with that Santa Claus rally. So we're seeing the same count on the triple Qs and on SPY, so we're getting a little confluence here, which tells us it could be possible we are due for that next leg higher. We just need to watch these critical support levels. So if we start breaking below about 372 to 368, we need to zoom out to the daily chart because we're more than likely going through that full-blown correction. So if we start breaking through that critical support, we're more than likely going to correct this longer term bull rally, and we're going to correct 5 waves going all the way back to September of last year. So if that's the scenario, we're more than likely going to see the triple Qs coming down to one of these levels here, right around 350 to 352, 334, or about 316 to 317. If we start breaking below 316, we're more than likely going into a bear market. However, this is still a secular bull market, and it's more than likely this correction would be followed by another bull cycle that would take us to new all-time highs. So a summary recap on the triple Qs is if we start breaking below about 372 to 368, we're more than likely coming down to about 352, 334, or 316. Those are the price action levels to pay attention to, and that is how you're going to be objective in this bull market. Wait for the critical support breakdowns to tell us that we're going much lower, And then once we get into that stock market correction, we'll have very clearly defined support levels that we want to watch the price action, and that will tell us when the stock market correction is likely over and we can start thinking about taking on more long positions. So you could trade this however you see fit, but those are the critical levels on SPY and the triple Qs I want you to pay attention to. These are the markets I highly suggest tracking your performance to. So on SPY and triple Qs, these are the ETFs you probably want to track the closest. Yes, you can get into other stocks and other ETFs, but if you're trying to beat the market or at least get what the market returns every year, you want to stick with the indices that better represent the market, and that's going to be the SPY ETF and the triple Qs if you're looking for more tech exposure. So watch these very critical levels and don't rule out the possibility the stock market is going to continue to go higher as long as we're above our support trend lines and our critical supports.